The entire crypto market holds its breath as over $1 billion gets liquidated. More details emerge about the Luna crash, and will Tether become untethered? My name is Ben. This is your nightly crypto news wrap-up. Let's get it. For 2 years in a row, the crypto prophecy sell in May, walk away remains true. And if you still don't think we're in a bear market, I really don't know what to tell you at this point. The past week alone, the total crypto market cap has shed over $500 billion, falling from $1.7 trillion on May 5th to $1.2 trillion today. As a result of this brutal sell-off, the market remains in extreme fear. CYCrypto.com reports in the past 24 hours, the total number of liquidations stood at $1.28 billion, with over 411,000 traders being caught in the crosshairs. Crypto analyst Ali Martinez pointed out that Bitcoin has broken a historic trend line that could send the price below, down 40% to $20,000 based off the last two times this happened. He also mentioned the Bitcoin whales continue to exit the market as the Ethereum whales are buying the dip. In 5 years, when we look back on this 2022 Luna crash, will it just be the first domino of the Black Swan event that leads to Ethereum flipping Bitcoin? It's possible. If this week of max pain in crypto has taught us anything, it's that anything's possible. Is there any hope to recover? How long will it take? Well, let's pass it over to our guy Frankie Candles for a market watch.
Thanks, Ben. All right, guys, let's go ahead and do a little market watch here. We've got Bitcoin coming in at $28,596, down about 1% on the day, down 21% on the week. We got Ethereum coming in at $1,900, guys, down 8% on the day, 30% on the week. It's brutal out there, guys. It's absolutely brutal. ApeCoin, let's add a little positivity here. Let's look at our top gainers. ApeCoin bouncing back to life, up 32% on the day, and also still down, but still down 46% on the week. AMP up 11% on the day. Quant up 11% on the day, and Maker up 8% on the day. Guys, it is brutal out there. We are just continuing to bleed. We got a little bit of a bounce after we wicked down to about $25,350. Got a nice little bounce there, but nothing really to write home about. But trust me, it's the hard times in crypto that makes millionaires. So always remember that. If you guys want to follow me and keep up with all the TA, it's Frankie Candles on YouTube or Frankie_Candles on all socials. Back to the news.
Thank you, Frank. As the tragedy of Luna continues to unfold, more details emerge about the downfall of its stablecoin UST, the price of Luna itself. Yesterday, the internet was theorizing that crypto exchange Gemini and hedge fund giants BlackRock and Citadel were responsible for the sell-off that caused UST to crash. Since then, Gemini has stated that they made no such loan, and BlackRock and Citadel have both come out and said that they do not trade UST. Although it's still unclear who the culprit is, the price of UST is still below 40 cents, and in the wake of this catastrophe, Janet Yellen has stated that there will be stablecoin regulation in place before the year ends. It's not fair to use the UST crash as the sole reason to regulate stablecoins, because the top 3 stablecoins are not algorithmic like UST is. As for the price of Luna itself, it's plunged over 99% today, and it's now barely trading above a penny. It's terrible. The $1 million of Luna 4 days ago is worth about $185 now. This has happened because of Luna's relationship with UST. Basically, in the past, if UST went above $1, it would burn Luna to keep it on the peg. This is part of the reason it ran up so fast last year. Unfortunately for the lunatics, that mechanism is a two-way street, because the more Luna falls in price, the more Luna gets minted. Now Luna is barely a penny, because in the past 4 days, the supply of Luna has gone from 346 million to 7.1 billion. As if we needed any more shakeups in the stablecoin world after seeing what happened with Luna and UST, due to the total crypto market cap losing 500 billion in a single week, major price capitulation panic sell-offs, record stablecoin outflows. The price of Tether temporarily lost its peg and wobbled down to 97 cents. Like UST, the short hiccup did not stop Tether from honoring its $1 redemptions despite market volatility. To fix the issue, Tether moved $1 billion from Tron to Ethereum and $20 million from Tron to Avalanche without changing the supply during the process. Price of USDT has already restored itself to 99.7 cents and has honored every redemption regardless of the wobble. Although Janet Yellen will probably try to use this against Tether, she really can't, because despite the hiccup, they honored the peg and protected the investors, unlike herself and the SEC have ever done. The takeaway from this is that Tether was able to recover because it's not an algorithmic stablecoin, and the distinction between the integrity of the two should be taken into account before the government oversteps their boundaries. That's all I got. Be blessed. BitBoy out.